So in Chapter 4, we get to do our first tax return, and I'm going to attempt to show you how to do this in Connect. And so just be patient. I may have to cut this into 2 videos. But first of all, we're going to talk about the problem and write down the important information, and then I'm going to jump over and show you how in Connect to fill out a tax form. Now, the good thing in real life, you don't typically ever fill out a tax form manually. You have software that does it. But as you'll hear me say, software is great, but you have to put it into the software appropriately for it to populate the way that it should, and then you have to be able to look at those tax forms and make sure they're accurate. So yes, the software is good, but it's only as good as the person putting the information in and putting it in the appropriate place. So I'm going to be looking at problem number 55 in Chapter 4. And we have DeMarco and Janine Jackson, who have been married for 20 years. And so they're married. They have 4 dependents. Who do qualify, so we don't have to worry about that. They have salary of $100,000, qualified business income, or QBI as we call it, of $10,000, and that's from an investment in a partnership. So we'll make a note out here that this is a partnership. And they sold their home this year. So they purchased the home. So we have sale of home, $200,000 purchase price, and they sold it for $250,000, so that's their sales price. So they've got a $50,000 gain. The gain on the sale qualified for the exclusion from sale of principal residence, so they've already determined that for us. And the Jacksons incurred $16,500 of itemized deductions. And they had $3,550 withheld from their paychecks for federal. So federal withheld, so in other words, meaning what they've already paid in through their paychecks was $3,550. They're allowed to claim a child tax credit for each of their children. However, because Candace is 18, the Jacksons may only claim the child tax credit for other qualifying dependents. That's so confusing when you read the tax code and it says other qualifying dependents, and you immediately think, well, it's not a child. Well, it is a child. It's just not a child who qualifies for the full credit. And so we have 3 children who have the child tax credit, and then we have 1 child who's over 8. No, she's 18, and so she gets the other qualifying credit. Okay, so I think those are the notes that we need right now. And so it asks us, first of all, to determine Jackson's taxable income and then their tax liability or refund. Now remember, it's about terminology. And so taxable income is going to be their gross income with minus their for and from AGI. And then once we get that taxable income, we'll calculate tax liability, income tax liability, based on the tax charts, and then we will, or tax rate schedules, and then we will apply credits, and we will apply tax withheld, and finally come up with tax due or refund. So watch your terminology. So we'll start with gross income, and that is $110,000 because we have the salary plus the qualified business income. 4 AGI deductions, and in this particular problem there are none. And so from that we have AGI, or adjusted gross income, of $110,000. And then we have our from, and so we can either do standard or itemized. And standard is $24,400. And so we do whichever one is higher. So $24,400 is higher than $16,500. So they're going to take the standard deduction. And then we have a deduction for QBI. And that is 20% of QBI, or $2,000. And then from that we have our taxable income. So that would be our AGI minus our standard or itemized, whichever is higher, minus our QBI deduction in this particular problem. So it would be $83,600. Then we have our income tax liability, and this is where you need to practice using the income tax rate schedules, and in practice you will use those. I still pull those out almost every year and work with a client and show them how the tax rate schedules work. So you need to be aware of how to do that. On this one we would take, and we're looking at the married filing jointly tax rate schedule. So we see that we take the $83,600 minus $78,950. So the $83,600 comes from their taxable income. The $78,950 comes from the upper level of that particular tax bracket that we're looking at. We multiply that by 20%, and then we add to that the tax of $9,086. And so when you work that out, you'll come up with $10,109 as their income tax liability. Then they would have other taxes, which they don't have any. Then they would have their credits. And so we know that their credits are $2,000 for each of the children who qualify for the child tax credit, and then $500 for the one child who's 18 who qualifies for the other. So the credits are going to be $6,500. And then we would look at any prepayments that they've made. And we know that they have paid in $3,550 that has been withheld. And from that we get tax due or refund, depending on which. So they have a liability, that's their tax, minus a $6,500 credit, minus what they've already paid in. So they owe, tax owed, $59. Okay, then it asks us to complete the Jackson's Form 1040 pages 1 and 2 and Schedule 1 using the most recent. And so in Connect, what will happen, and again, just bear with me, I'm going to try to make this work without, and I've practiced and I've done it before, so I'm just going to try to make this work without any major problems. So this is the information that was given to you, and as you can see, you often have pop-ups where you can use the tax rate schedule. We use this one, and this is where I came up with the formula to calculate right here, married filing jointly. I use this formula right here to calculate their taxes. Okay, and so I'm going to go to the next screen, and it asks me what is Jackson's taxable income, and this is what we calculated in Excel. And then it asks me in this one to download the tax form and enter the required values in the appropriate fields. Follow the directions here very closely. What you have to do is download the linked file. Let me see if I can. So I don't think you can see the top of this, but the most recent form available is 2018. So I wanted you to see that there. And so you will download it to your computer, save it to your computer, and then you will fill this out. And so we have DeMarco, Jackson, and I'm not going to do the whole thing. And if you're not given a social security number, you just make one up. And then we have Janine, also Jackson, and just again, like I said, if you don't have it, just make it up for now. Obviously, in real life, you don't do that. You can make up a home address if you don't have it, and this problem may have given it to you. Okay, and then we would put our dependent's name here. So we have DeMarcus, Jackson, and you've got to put a social security number, relationship. Do they get the child tax credit? Yes. And so down here on our last one, that daughter that's 18, we would want to mark there. And so once you get everything filled out that you think you're supposed to fill out, then you save this to your computer. And then you upload. Okay, so I can close that. And so it says save it to your computer and then upload it here by clicking Browse Next and Save. Now I may not see your view of this is going to be a little bit different than mine, but you'll see a place where you can upload that document. And then in the next question, it says, this is schedule. See, here's the upload controls will be shown when you take the assignment. So my view is a little bit different than yours, but you'll see that. We did it last year. It worked just fine. And so then you'll see Schedule 1. And on Schedule 1, you just kind of need to go down through there and look at everything. I think the only thing this problem has is our partnership income, which is going to go right here. And then you've got to watch for your totals. Here's our total. And I think that's it for this one. So on your problem, just, look, do I have student loan interest? Is there IRA deduction? Was there alimony? Just look at each one of those, save that to your computer, and then you'll have the option to upload that. Okay, and then it says, let's see, well, that's the same one. Okay. And then the next part of the problem said, what would their taxable income be if their itemized total 28 instead of 16.5? So the only difference here is that instead of the standard, we take their itemized. So everything else is the same. We still have the QBI, and then we have a taxable income of $80,000. And so then it says, what would their taxable income be if they had 0 itemized and 6,000 for AGI? And so again, we just put that 6,000 there. They take the standard instead of itemized. We come up with taxable income. And it says then, assume the original facts. What if they incurred a loss of 5,000 on the sale of their investments? What impact does that have on their taxable income? And hopefully you know that that is limited to $3,000. So it's a $3,000 decrease to their taxable income. And then I think there's one more question to this. Nope, that's it. That's the only questions on this problem. So that's kind of what it's going to look like for you guys when you get into Connect. I recommend that you do your work in Excel or on paper, either way, so that when you fill it out and you move over to that tax form, you've got it in front of you. It's a great problem, really good introduction to doing your first tax return, and there's more to come. Thank you.